Hi, I'm Jimmy. In this video, we're going to look at what happened with Activision stock. Should we buy more stock today? Should we sell it? Activision stock is up really big over the past week. So that's the basic question. Okay, now let's jump right in. So Activision stock is a stock that I personally own. In fact, by coincidence, one of my more recent videos was on my personal investment portfolio, where I showed that I bought shares of Activision stock at an average cost of $63.40. That was a couple weeks ago when I bought it. Well then, by a stroke of good fortune, Microsoft announces that they agreed to acquire Activision stock in an all-cash deal. And when we dive into the press release that they released, well, Microsoft goes on about the platform of games that Activision has, and ultimately that they're paying $95 per share. Again, all cash. So that brings us to the current situation. I got my shares at $63.40, and after the news, well, the stock had a big jump in the stock price, and the stock jumped to right around $82 per share. So in my case, I'm up about 30% in a very short period of time. So that's great, but that brings up the question, should we sell here and take our profits, or should we hold the stock and see if we can get more profits, or do we even go out and buy more shares at the current price? To answer that, let's have a quick look at some of the numbers. So Microsoft said that they're going to pay $95 per share for Activision stock. And given the current price of the stock, well, that would imply that the potential upside is a bit more than $12 per share, which means that could potentially be more than 15% of a return. Now, that's a pretty good return. Now, generally, I like to use discounted free cash flow to try to come up with a fair value for a stock and what the stock might be worth and where you should buy it. There's a whole bunch of valuation methods similar to that one that are all trying to identify the potential buy price. But all of that goes out the window in this scenario because we know that Microsoft is going to be paying $95 per share. So not only is that our target price, but it also happens to be our ceiling. We know that the stock is going to get there, assuming the deal actually goes through. So the real question should be, do we think that this deal is going to happen? Or I suppose we could also ask, do we think it can happen? First, I think it's important that we go over and check Microsoft's ability to make this deal. So when we go check their most recent balance sheet, this is a snapshot. They happen to have their balance sheet on their website. This is a snapshot of their most recent numbers. And we can see that they have more than $130 billion in cash. $95 per share for Activision stock is a bit less than $70 billion in cash. So they have more than enough cash, or this is actually cash and cash equivalents. But they have more than enough to cover it, so whether or not they can is not in question. At least from a financial perspective, it's not in question. Now, another possibility is that the government could step in and stop it. Maybe they were to say something like, "Oh, Microsoft is a monopoly, and we're not gonna let them add Activision to this." Although I actually don't believe that that's going to happen because the government's gone after companies like Microsoft or Apple a few times, and clearly those companies have not been broken up since technically they're not technically a monopoly. The addition of Activision, even in Microsoft's own press release, they say that this will make them the third largest video game producer in the world with the acquisition of Activision. And that is by no means a monopoly. That by definition is not a monopoly. So I'm not sure that this is going to go any further, that the government's going to use the monopoly road to stop this from happening. So personally, I believe because this is a friendly takeover, there's a very strong likelihood that this deal is going to go through. And that brings us to the question, what do we do now? Do we sell? Do we buy? And personally, what am I going to do with my shares of Activision? Well, for me, since I already own my shares, I'll be holding my shares at this point. But even if I didn't already own shares of Activision stock, I would seriously consider buying more at the current price. And here's why. Unlike most stocks where we try to calculate the fair value of the stock and then we buy that stock anticipating that this stock in time will gradually get repriced to get more in line with our calculation of fair value. That's the very point of doing fair value calculations. Well, that's how I got into Activision stock. I did a fair value calculation, it looked much higher than it currently is. And that was the reason we bought it. And then we got lucky and Microsoft drove the price there immediately. So in this case, well, we know where the stock is going. We know where it's going to end up. We know it's going to go to $95 per share. Of course, again, assuming that the deal goes through. That's the number one question. If you don't think the deal is going to go through, stay away. It's not worth it. Sell your shares right away. But I believe the deal is going to go through. So it makes sense to buy the shares at the current price and let the stock go up to $95. The real question is, when will this deal close? Because on the closing date, we'll end up with $95 per share in it for every share that we have in cash. Now, if we're curious, if this cash payment should act, you should see it in your brokerage account a lot like you would see a dividend payment. One day, on the day the deal closes, you have these shares in your brokerage account, and the shares are going to be gone, and they're going to be replaced with cash at $95 per share. So if you have 10 shares, $95 per share, the shares are gone, the cash is there. It'll look a lot like a dividend from our perspective. So the primary question about do we invest today, it all falls down to the closing date and whether or not the required return we get based on the closing date is worth it. So here's what I mean. If we bought our shares today, let's say we paid $82.15. Well, if the deal closed in exactly 1 year, well, our return would be 15.6% according to these numbers. And that's a great return. Knowing that the stock market has averaged between, let's say, 9 and 10% a year on an annual basis. I mean, already this year, the stock market is down. And if we could lock in a 15+% return for this year, what if the stock market kept tumbling? This could end up being a fantastic return that did a good job of sort of keeping our portfolio at a decent level, with a decent return. But what if the deal doesn't close in a year? Let's imagine it closes halfway through next year. So we'll call it 18 months from now. Sure, the total return is up there at the same amount. You get the same 15.6% no matter what. But on an annualized basis, since usually that's how returns are looked at, well, our return would be just above 10% because we're spreading out the same return over a slightly longer period of time. 10.6% again, not bad. That would be above average of what the stock market typically does. Okay, now what if it takes even longer? What if it takes all the way to the end of next year? So let's say 24 months from now, so 2 years. Well, in that case, same 15.6% total return, but now spread out over 2 years. That's a bit less than 8% per year. If we thought that was going to happen, we probably better off just buying like an S&P 500 ETF or something like that, assuming that we believe the S&P will do what the S&P has averaged over the long run. Now, personally, I actually think that it will take about somewhere between a year and 18 months. I think that's a reasonable time frame. I wouldn't be surprised if it ended up being, 12 months, 15 months, 18 months, in that area. And if that's the case, then the return from an investment perspective seems quite logical, which is why I'm happy to sit here and hold my shares. I still think that there's some upside to the shares between now and then. Plus, frankly, I don't really have a better investment idea right now that I think could outperform this one. Now, one different scenario to this is, let's imagine that I kept these shares and over the next week, the stock jumped to $93 per share. I would probably sell at that point. At that point, I would sell because I'm doing the same math and I'd say, okay, a year out, but now there's only a $2 possible increase. What would I do then? What's the total return? Well, now it's not worth it. Now I would sell up. But with the potential 15% upside over the next year, well, why not? It makes a ton of sense to stick around and collect more of that 15%, if not the whole thing. Now, if you're wondering how we found this stock and how we actually went ahead to value it and what made us want to buy it, first, I actually did a video on Activision before I bought the shares, so I will leave a link to that video in the description below. But we're also getting ready to launch a website that lets us calculate the fair value of a bunch of stocks very quickly. This was the calculation we had done for Activision stock that said this looks like a really good buy back when we bought it at 63 and change, back when I bought it back at 63 and change. If you would like access to this website, we're getting ready to launch it. The website will be launched in the next few months. I think it's about 6 months. We said by the end of the second quarter of this year, the website will launch. But if you sign up for the website today, the price that you pay for access to the website we'll lock in. We're never going to increase that price on you. So if you'd like to sign up to the website, I will leave a link right here. I will leave a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.